Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest is Michael Malter. Michael is a bankruptcy attorney, partner in Binder and Malter LLP, a boutique bankruptcy firm, and where he's been for 23 years. He graduated with a JD degree from the University of Santa Clara School of Law in 1980. He is a certified specialist in bankruptcy law through the State Bar of California Board of Legal Specialization since 1995. Michael is married with 2 daughters, and his outside interests include labradoodles, a subject in itself, and hiking. And Michael has been an adjunct faculty member at Santa Clara University School of Law since 1985, and he's a founder and first president of Congressman Don Edwards Inn of Court, a chapter of American Inns of Court. And as I understand it, that's like a forum or a place where attorneys can go and share their problems, particularly, I guess, in the bankruptcy area?
Yes, the Don Edwards Inn of Court is limited to bankruptcy practice. It's one of only 4 or 5 inns in the country that specializes in bankruptcy, and we're very pleased that all of our local bankruptcy judges also participate in the inns. So it's a good opportunity for lawyers and judges to interact outside of the courtroom.
Great. Today, Michael and I are going to be discussing what you should know about bankruptcy relating to individuals. And before we get started, I want to just caution you that bankruptcy is a complex area, and so you should consult with an attorney related to your situation. This could just be sort of an introduction to a continuing conversation that you may have with a bankruptcy attorney. So Michael, thank you for joining me today.
My pleasure, Mike.
Okay. You've been a bankruptcy attorney for 30 years.
That's correct.
Is bankruptcy different today than it was in the past?
The last 2 or 3 years have just seen tremendous change, directly related, of course, to the state of the economy and the state of real estate. I realize we're talking about individuals today. I'll say that in regard to businesses, we're seeing far less business reorganization because it takes money to do reorganization, and there's no money out there. But in regard to individual clients, we're seeing a different quality of client than I've ever seen in 30 years. I'm seeing people who never would have contemplated having to speak with a bankruptcy attorney, never would have contemplated the prospect of bankruptcy. These are people who are professionals, very upstanding members of our community, people who across the board tell me that they've never missed a payment, house payment, credit card payment, and yet they now find themselves in desperate financial straits.
So that's a real reflection, again, of what's going on in the economy out there. Anyway, maybe you can elaborate a little bit about why you think that's the case.
Well, it's just all pervasive. Once upon a time, a typical client was someone who perhaps went nuts one weekend with a credit card. But today, the individuals I'm seeing, and I'm seeing doctors, lawyers, and Indian chiefs, I mean, no one is immune from what's happening. Many individuals have suffered from the downturn in real estate. Many Californians believed that the safest path towards successful retirement was through purchase of investment real estate. Many folks borrowed against their house in order to either finance a business or to purchase other real estate. And these people are now in a very precarious circumstance.
Yeah, especially if they bought property in like the Central Valley. My gosh.
Central Valley, frankly, just south of here. There are vast areas of Gilroy, Modesto, Gilroy, Los Banos, just going south, where the values of houses are now maybe a third of what they were. Wow. And it's very common that the amount owing on those houses is far greater than the value of the house.
Yeah. Okay. What are the warning signs that you should be thinking about seeing a bankruptcy attorney?
Well, I think that when individuals find that their expenses far exceed their income, it's time to take a hard look. And sometimes that's triggered by adjustable rate mortgages suddenly go up. And whereas many folks are already cutting it very, very close to begin with, especially because of the high cost of living in the Bay Area, all it takes is a jump in an interest rate, for example, credit cards or mortgage, and folks may find it difficult to make ends meet. At that point, when individuals find that they're having to choose between making a mortgage payment or a credit card payment, it may be time to see a bankruptcy professional to help prioritize.
Okay. So why does it make sense to see a bankruptcy attorney early?
Well, very often there can be extremely beneficial planning prior to a bankruptcy filing. Steps can be taken to try to ensure a decent life after bankruptcy. Those are steps including efforts that individuals can make regarding credit prior to the bankruptcy filing, as well as a thorough evaluation of all assets and liabilities to determine what type of bankruptcy might best apply and what sorts of planning, what thought should be put into the bankruptcy filing long before it's filed.
Okay. All right, well, let's get into some details. What are some different bankruptcy chapters that apply for individuals, and what are the advantages and disadvantages for those different ways to go?
Well, for individuals, there are three types of bankruptcy which are available. The first type of bankruptcy is called Chapter 7. Chapter 7 is really just a liquidation proceeding. A Chapter 7 is designed to give the individual a fresh start. It's fundamental to our American belief that we believe in entrepreneurism, we believe in people having a second chance. Mm-hmm. So with a Chapter 7 filing, basically the goal is to eliminate as much unsecured debt as possible. Secured debt, as in home mortgages or a loan on a car, are not wiped out in a Chapter 7 filing. Mm-hmm. Unsecured debt, such as credit card debt, or another good example these days, unfortunately, is a deficiency where a foreclosure has occurred and a lender has not been paid, especially if it's a junior lender. That lender may still be seeking payment, and that's another form of unsecured debt. So in Chapter 7, the goal is to jettison as much unsecured debt as possible. The individual typically retains the secured debt, typically retains their assets, and gets a fresh start. And that's Chapter 7.
Okay.
The next type of bankruptcy for individuals is Chapter 13. Chapter 13 is a form of payment plan. And a Chapter 13 I call a payment plan with a bite. And for a change of pace, it's not the debtor who's being bitten. Mm-hmm. In a Chapter 13 payment plan, essentially all debts are consolidated into one amount, and my client makes a single payment each month for as long as 5 years towards paying some portion of that total debt. Mm-hmm. Chapter 13 may pay the unsecured debt as much as in full, or 100 cents on the dollar, or may pay as little as 0 cents on the dollar. Mm-hmm. It's not unusual in Chapter 13 for individuals to repay 5 cents or 10 cents on the dollar. But the key with Chapter 13 is during the time of Chapter 13, all creditor action against the individual is suspended. No one can sue, no one can collect in any way. So all creditors are really bound by the Chapter 13 process. Mm-hmm. The last type of bankruptcy for individuals is one that's not often used, and that is Chapter 11. Mm-hmm. Chapter 11 is most commonly known as corporate reorganization. So, for example, Lehman Brothers is in Chapter 11. GM filed Chapter 11. But it is also available for individuals. And there are individuals in Silicon Valley especially who may not qualify for Chapter 7 or Chapter 13 and may be forced to look to Chapter 11 as an option. The biggest